Thank you so much, Mark, for spending some time to answer some questions that I know your clients have and also that I have personally. And even more importantly, questions that people have that haven't asked you. And they're really been centralized around the election, COVID, 2021, and there is some uncertainty in these challenging times. And I just thought, let's get this stuff out as quickly as possible to your clients to make sure that they understand where are their portfolios going potentially, and also taking away some of the uneasiness of these times right now, especially going into an election next week. So I would say my first question for you is this stock market ready for a major downturn?
Well, that seems to be the question on everybody's mind, of course. We'd have to first define what is a major downturn. Is a major downturn a 10% drop, 20% drop? Is it a COVID drop, where it was down, 35+%?
Quickly.
If I were to kind of unpack that, so I would say the market. Well, let me step back. The market, we should have taped this a couple of days ago because the market is selling off today. As
Right.
we look at a screen, everything's red. Market's down like 800 points today as we tape this, and it was down quite a bit more a couple of days ago. So the answer is yes, we're obviously going to see some volatility, which we expected pre-election, as people took some of their technology profits off the table or just hunkered down in anticipation of a messy election.
Mm-hmm.
So that's kind of happened. That's what I would call, expected volatility. But if this is the big one, I'm starting to see some headlines on the certain news websites. Is this the big one? Is this going to be like the 1987 drop? And I would say no. And the reason being is, people forget, even though if the election is messy, we have really three factors that are driving the stock market, and they haven't changed since our last webcast. One is COVID, which we can talk a little more later. One's the election, or two is the election, and three is all the massive amounts of stimulus that are still in the economy. Interest rates are 0%. You have Federal Reserve that's going to print money as much and as needed. We've never seen so much stimulus.
Right.
So back to the original question, yeah, I think we're going to see some volatility, but I don't think this is going to lead to some massive sell-off unless one thing occurs, and that is a very disruptive, if we do not have a president, an official president within a month, or if it were to go to the Supreme Court, I think the markets wouldn't like that.
Yeah.
So I would expect even more volatility. But at the same time, with all the stimulus that's in the system, I do expect people's stocks to do well next year.
So before we get into the election, how will COVID affect people's investments?
Well, COVID, what triggered the sell-off today was the increase in cases throughout Europe and also a spike in cases in the United States. So I think there's a fear element. COVID, obviously, if we have to shut down again, there's going to be economic impacts. But what needs to, I think what needs to play out is, I'm a data nerd, and I'm looking at all the coronavirus stuff, not daily anymore, but weekly.
Thank God.
And it appears that even though the cases are spiking, the deaths are not. So it's much different than when it was in March and April. And so if that's the case, I think as soon as the conversation changes to nobody's dying and hospitalizations are down, that could calm the markets. Also, as new therapeutics come out and a vaccine comes out, those are all going to be positive because for the stock market and the economy in general. I just don't know when all this stuff is going to occur. But I do certainly think it will be into next year, and I think those will have positive effects on the stock market.
Now, would you consider U.S. bonds safe during this time?
That's a good question. So they typically U.S. bonds, specifically government bonds, are the safe haven, and there's usually almost always a flight to quality. So people are selling the risk assets and buying the safe assets. I do think that's going to continue.
Hmm.
Although one thing that's interesting, I was looking at today, and today is Wednesday, October 28th. The stock market's down, 10-year treasury is down, and gold is down, Bitcoin is down, everything is down.
Wow.
And so what that kind of, when I saw that this morning, what I think that what is happening is pure emotional, vomiting for,
Yeah.
because usually you do see a rotation from the risk assets into the safe assets, and it's not happening today.
Yeah. Now, getting into the election, what would a Biden presidency look like compared to a Trump presidency?
Well, I think it really depends. I personally think it's less important who wins the presidency as opposed to who is in control from the House of Representatives and the Senate. So if Biden wins and the Democrats take the House and they take the Senate, then I do think we're going to see some dramatic changes, both from a tax standpoint and a regulatory standpoint. I think they will try to push through, and this isn't a political statement, some of the Green Deal initiatives, but they're going to have to pick and choose. The tax increases are going to be difficult for Biden to pull off during a recession, and we're still in a recession. We're climbing out of it, so I don't think it's going to be as bad as everybody thinks it is. Or at least the non-Biden supporters. Tax increases usually aren't as big of a drag on the economy as most people think they are. Now, if we do get into a divided government, let's just say that the House, say Biden wins, the House stays Democrat and the Senate stays Republican, then I think you're going to see a lot of gridlock. And I think tax increases are going to be difficult to get through. I think you'll see Joe Biden doing a lot of executive orders like past presidents have done to get around Congress. But that's not really going to affect taxes as far as I can see.
Yeah. So can you tell us a little bit more about Biden's tax plan?
I can, and I have some notes here that I will. So just to go through it, in summary. So he's, the biggest one is he's going to remove all the tax cuts that were done in the Trump administration. So corporate taxes will go from 21% back to the original 28%. So that'll affect things. There's some stuff in there that taxes the rich or the wealthier, the Social Security increases. So the people above making 400,000 in wages will pay 12.4% Social Security tax. Capital gains tax, which is typically 15 to 20%, if you're making over $1 million, will go to the top bracket, which is 39.6%. So that will definitely take out of some of the wealthy's pocket. I think one of the biggest things is in his plan is they are talking about eliminating the step up in basis at death. Right. And so, in the past, if you had someone who had Amazon stock that they paid $50,000 for and it's worth $2 million, with a huge, gigantic gain, if they die, you get a market value step up as of the date of death. So they're talking about eliminating that. So that will be a big thing. Wow. Other business taxes, there's a qualified business 20% for reduction in taxes for qualified businesses. That's a big deal. So that will be repealed. So I think it will have a significant effect on the economy. And depending on who you talk to, it'll be a negative drag on GDP. But again, I don't think they're going to be able to get it all through. I think there would be some compromise. So with taxes, it's still all up in the air. That's the problem with the election is I have I really honestly have no idea, just like everybody else does, because there's about 42 different variations on what could occur.
Yeah.
Not to mention riots and Supreme Court and all that
Yeah.
stuff.
There's a lot of unrest, and you're right. Nobody really knows. You have great experts that are telling totally different things. Who's right? Who's wrong? I think until it all plays out, we won't really know.
I say the people who do know, they're either ignorant or stupid or deceptive. So
Yeah,
so all we
I'd
can
say
do is
probably the third one, more than likely.
probably, yeah,
Yeah.
exactly.
Now, are there any investments that will do well under Biden? And are there any investments that will do well under Trump?
Well, I think if I use just common sense, I think with Biden, you'll see some of the green initiative companies, solar, wind, companies like that will do well. What I think would do poorly, which I guess would also relate to a Trump presidency, would be probably energy stocks. Um, because there would definitely be, they're talking about a significant increase in regulations and energy stocks. And I think, I'd have to think through that, but yeah, I can't think of anything right now, but I'll get back to you on that.
What about international versus United States investments?
Well, I do think that they're, well, I think they're both going to do well. I think stocks will do okay just because the massive amount of stimulus. I think international stocks, which would be, I'll break into, developed European stocks, Japan, and then you also have your emerging markets, which is the rest of the world. I think they'll do well just because they're so inexpensive relative to the U.S. market.
Yeah. What
And
about what about small versus large cap?
well, I think also small, large cap growth, which is, your Microsofts, your Amazons, Apples, and all those have done. They're making history right now, how much they have outperformed, say, large cap value. You go back 80 years and growth stocks haven't outperformed by this wide of a margin. And so what that tells me is once there's a rotation out of those stocks, growth stocks, tech stocks, and they get to a point where they're deemed so expensive, there'll be a rotation into these cheap stocks. And that will be large cap value, that'll be small cap, which have underperformed. Underperformed dramatically. I don't have a slide I can show you, but I do have some of those charts, and it's like breathtaking how much they've outperformed compared to their historic averages.
It's amazing.
So we're kind of tweaking the portfolio. We this year tilted the portfolio and added. We used to be 70% U.S. stocks to non-U.S. and now we are 65. So we do these tilts where we see the opportunity.
Yeah.
And the opportunity, the problem with, any investment thing is your timing is never going to be right. So we're always going to be early. Hopefully we're not late. And that's kind of what we're doing. And then we've kept our targets. We've been trimming large cap growth and recirculating into some of the other underperforming classes too.
So that's COVID and election. Talking about 2021, how will the economy do in 2021?
Well, I think it's going to come down to, again, the advancements in the COVID therapeutics and vaccine and all that stuff, and getting the masks off everybody, and getting these businesses that are closed or halfway closed back fully open. Mm-hmm. I do think I do a lot of reading, and the economists that I respect and gravitate towards, they think that 2021 is actually going to be a good growth year. Mm-hmm. And also going into 2022. So the fundamentals are there. And what we've seen so far, even though we had a massive amount of unemployment and most of the devastating economic data is coming from just a handful of sectors. travel, airlines,
Sure.
cruises, and things like that, restaurants. But there's still large pockets that are still doing just fine. They really haven't seen a too big of a hit.
In 2021, do you think that there's going to be inflation, deflation, stagnation?
I don't know, Gary. I covered this in our last webinar. I do think the Federal Reserve has to worry about deflation. And interest rates, the 10-year Treasury, which was at 5%, in 2007 is now 0.75%. And,
Do you
but,
think those will remain low?
I, I think that's what I can't, I'm not exactly sure. I don't think they're going to spike up, but I think interest rates typically, once you do see a recovery take hold, you will see interest rates go up. So they may go 0.75 to 1 to 1.25. I don't think it's going to be a sharp spike. I don't think we're going to see massive inflation.
Yeah.
I do think the country is going to have several big, huge decisions to make, in the next several years. And that's, because just like us personally, if you're overspending and you have a huge amount of debt, you either the government's either raise taxes or they have to cut expenses.
Yeah.
And they're going to have to figure out which one is the least damaging and agree upon it, which seems impossible right now.
And that's probably one of the biggest things, especially in regards to cutting expenses. Nobody wants to cut their pet project, so they're going to fight like crazy, especially if it affects their constituents. They just want to dig in, and you're right. There needs to be leadership that can make compromises. That can say, okay, let's look at the United States as a whole. What's best for that, as opposed to these little segments that are throughout the United States. Do you think that interest rates will remain low even past 2021?
That's also one of those unknowable things because I hope interest rates. This is going to be maybe a controversial statement is I hope interest rates go up. I hope we do see some inflation because deflation is much more difficult to deal with. And
why so?
Well, once prices start going down, which is what deflation is, the human nature is to stop and think that you can buy what you were going to buy at a cheaper price next month than you could buy right now or 6 months from now. It's happening in housing. Housing's really strong right now, but I was talking to someone yesterday. They want to upgrade their house, but they just don't want to pay, and so they're waiting for prices to come down. Inflation
in the market.
Inflation is the inverse, where people want to buy now because they think prices are going to go up. And so once you get into this deflationary spiral, like Japan did and some other countries, it's hard to dig out because you can't stoke the economic fire. It gets more and more difficult. So I do think the government did the right thing. I think that all the stimulus, no one likes the debt, but it had to be done. And so back to investments, I think what we're going to see is declines like we're seeing right now, which could be 10% decline before you get buyers in and then go back up. I don't think we're going to see a huge decline, but I think as these small declines happen, we're going to be in there buying and rebalancing, buying the more of what's gone down the most.
Yeah. What should your clients be? What is it? What's an aspect that they are very concerned about right now that you're like, you shouldn't be concerned about that really right now, that you can put them at ease?
Well, it's interesting this time around. People don't seem to be as concerned from their investment standpoint. We've been, going, client to client, kind of saying, if you want to reduce your risk, we can take a little off the table. A few have, most people have not. The big concern is the election. That's over and over and over again is the election. are my stocks going to tank? We also get, the question of bonds with low interest rates. Are those going to tank if interest rates go up? And, so I think those are most of the questions I'm getting. But what's helpful for us is for all the clients that are retired or that are nearing retirement that we've done planning work, is we use very conservative rates of return. So I talked to a client a couple of days ago saying that, because that's the case, I don't care really what happens unless it's, a meteor, nuclear bomb, or some, whatever that affects everybody. I think they're going to be okay.
Yeah. Yeah. Any last things?
Let me see my cheat sheet here. I can't think of anything. For clients who are watching this, I think the important thing to keep in mind is we're ready for volatility. We're going to take advantage of it. And also that volatility is normal. What happened in February and March is not normal. I mean, that was highly abnormal, the speed and ferocity of the decline. We really haven't seen that before. But usually these little 5-10% dips, those are happening 2-3 times a year, every year. And so hopefully the election, I'm just praying that the election, does get resolved in a reasonable manner. And if so, I think the markets will adjust, and I think clients will come out just fine.
Which is a good thing. I mean, I remember in February and March when everything was so volatile, you're like, I don't even know what's going to go on tomorrow. Yet we are now into tomorrow, and we're okay. I think it finds its way to, we figure it out and we move forward and we do the best that we possibly can with the information that we have. And I think you guys have done a great job of that, to be able to try to be ahead of the game, so that you can minimize any losses that you may take, but also taking advantage of opportunities that are out there and being able to see those instead of being in a fear-based and just crawling into a corner and, let's sell everything and put it in cash. You don't want to do that as well. So,
just a final note, I don't know how this affects investments, but I really do think we are going to continue to see a division, in politics. We're going to see pressure on the so-called wealthy and the underprivileged, because the divide is again, talking about historic, it's never been wider. And so I think that's going to lead to some social issues. And I think, there hopefully will be some talk about how to make some smart decision to improve capitalism and not continue to go, this massive divide. So it'll be interesting to see what happens. But I do think we'll get through this election and get to the other side, and everything will be fine.
Yeah. Well, thank you, Mark, for spending a little time, and hopefully this will put people's minds at ease, their hearts at ease, and understand that they got somebody looking out for them, especially their portfolio, which is.
And I do want to say, for the clients that are watching this, if you're uneasy, pick up the phone and call us if we don't call you first, and because we're here for you, and sometimes you just need to talk through it.
Great advice. So thank you again, Mark, for your time. Really appreciate it.
Thank you, Gary. Appreciate it.